Thanks, Chrissy. Thanks to Stuart Jackson, the RIU team. Another great event down here in Freo. Although, as most of you that do know me, I'm a staunch West Coast Eagles supporter. So here to talk about the company, Global Lithium, the position we're in. Certainly one of the few companies on the planet that is in a position of strength in a market downturn. Most of the heavy spending for us has completed in terms of exploration, metallurgical, DFS, technical de-risking work streams. So we're in a wonderful position, as I say to my colleagues. For the next 6 months, we're in an extended reporting season. So really bringing all the terrific results of last year's drilling, a 60,000 metre campaign that finished only a handful of weeks ago, to market, along with some other terrific news around the metallurgical test work that we've done, indicating super high recoveries at our Mana Lithium deposit, along with some fantastic results on the approvals front, which will lead to a mining lease being granted in the June quarter of this year. So when that market rebound comes, and I'm very confident will, and if anyone wants to get a view on the market from me, I've been in the sector 14 years. This is the third lithium cycle I've been through, so I know exactly how they work and when they rebound and how they rebound. And this one's quite different to the previous cycles. So happy to share my views. Come around at booth 42 and I'll be pleased to share my views with you. But certainly Mana and Global Lithium are in a great position given the terrific work we've done over the last couple of years. Standard disclaimer, of course. Obviously, we have two projects, one up in the Pilbara, our Marble Bar Lithium project. It's an 18 million tonne resource. The traditional owners up there are the Nyamal people. And our second project, 100 kilometres east of Kalgoorlie in the Eastern Goldfields, our Mana Lithium project, a 36 million tonne resource at 1.13%. And the traditional owners in that area, the Gagada people, so pay my respects to their past. So some highlights. This is really the company on a page. A few things. I talked about having the two projects. So collectively across both projects, a 54 million tonne resource, and importantly one that has scale, certainly additional growth going forward. So that having those two projects gives us wonderful development optionality. And importantly, from an offtake perspective, 70% of our offtake is uncontracted. And that's really, really important. I've said previously, offtake is your weapon. You don't give it away lightly. And we've got tremendous interest from global, tier one counterparties across Japan, Korea, of course, China, recently India, Indonesia, of course, Europe and North America. So there's a general understanding out there that we've heard a few presenters talk about the lithium space. It's still very early days, and the sophisticated sort of producers and users of lithium in the world are actually quite concerned at the moment with the pullback they're seeing in projects and the incumbents slowing down production, because they know the demand is coming, as do I. Our projects are both JORC compliant, so we're not Johnny-come-latelys. We've been in this industry a while now, and we've worked really hard to drill out our projects and prove them geologically. So two of only a handful of JORC compliant lithium resources here in Australia, and they're in wonderful mining jurisdictions in their own right, being the Pilbara and of course the Eastern Goldfields. We are expecting an update to our mineral resource estimate for the Mana Lithium project on the back of the 60,000 metre exploration campaign which finished late December. And that'll be coming out to market in the second quarter. But that's definitely not the finish line for us. We've got a resource that's still open in multiple directions and, of course, at depth. We talk about jurisdiction. I think that gets banded around a lot. But, the fact is here in Western Australia, we've got the runs on the board. And it's not just the location of Western Australia in terms of the proximity to the end users up in North Asia, but it's also those soft disciplines, the expertise we have here around mining, services, contractors. And we're also, of course, very close to a number of existing lithium assets in and around both the Goldfields and the Pilbara. And, of course, wonderful infrastructure by way of rail, road and, of course, port access. Strategic partners are important. We're quite lucky to have Mineral Resources sitting on the register at 10% and CanMax, who are sitting there as well. CanMax is one of the largest lithium hydroxide producers in China. They currently own and operate about 130,000 tonnes of lithium hydroxide conversion. using spodumene as the feedstock. So we get some wonderful insights in terms of where the market's going, technology trends in the sector, and again, as MD for the company, that gives me great confidence on the downstream side, and of course on the upstream side, having a partner like Mineral Resources is also very important. We're well capitalised. We've got 36 million in the bank as of 31 December. So again, you are going to see a very prudent, disciplined approach by the company this year in light of where the market's at, but we are pushing on. It is going to be a disciplined approach, and having that money in the bank is critical for us because we certainly won't be in the market raising capital this year. We'll look to see that market improve. We're expecting that to happen in the second half, and again, we'll be one of the few companies that's good to go by way of a de-risk project. And in fact, this pullback in the market, in my honest view, is not a bad thing. I think last year there was probably too much froth in the market, but the reality is spodumene price is moderating. It's only going to be the good projects that are left standing going forward, and they're the projects that are going to attract the investor and also the customer interest. We've got a strong board, a board with more than 180 years of experience. I'll talk about the board shortly. And I've also got some really good insights through my role of chair of the LME Lithium and Cobalt Committee. I've been in that role for about 4.5 years, and really good insights into the companies like Ford, Northvolt, what's happening in Europe, and of course China and North Asia, which is where the most of the lithium cathode and battery production is centred. And we're a company that's really thinking outside the box, value accretive. We've only been listed for a short period since May of 2021, and certainly come a long way through the diversification of our assets. And we're always looking for the next opportunity. So just a snapshot of the company, a market cap currently around 117 million. Obviously been sold off with a number of the other lithium stocks, but sentiment is everything in this industry. And I've certainly seen it rebound as quickly as it's come off. Shares on issue, about 260 million. As I said, 36 million in the bank. The register, as I said there's a couple of high net worth individuals, Mineral Resources, Canmax taking close to 20%, and the balance retail and institutional. There's a couple of brokers covering the company on a non-paid basis as well. Touching on the board, there's about 180 years of cumulative resources experience here in Western Australia through mining, operation, EPC, funding, capital raising, legal and corporate governance. So we think we've got the right board for the company, a strong board, a very curious board. They're all local here in Perth, so it makes discussing strategy very, very convenient, and the company is very heavily committed. We've also got a great management team and the team getting it done at ground zero, and they've delivered some fantastic results for the company. So hats off, and I do encourage you to get around to our booth throughout the day and meet some of the team. So let's take a bit of a deep dive into Manna. 2 years of exploration, about 100,000 metres of drilling, a combination of RC and diamond. Currently grading a 36 million tonne resource. Just bear in mind that 36 million tonnes only based on the historical and the 2022 drill campaign, so we will have that updated MRE coming to market in Q2. Big focus on infill last year, and what we're finding is the grade is lifting, really high grades, sort of grading anywhere between 1.3, 1.6% on a continuous basis, and it's a clean pegmatite, very low in iron. And that's really important for the processing. We've found through our metallurgical test campaign, we're getting some wonderful recoveries. So we've got quite a significant MET announcement coming in Q2 as well. So a combination of extensional, the resources is still open. And this year we're going to focus quite heavily on some targets to the south. There's some wonderful pegmatites undercover to the south. In fact, we had a new discovery late last year, and that's going to be the focus of our exploration this year. Great location. Location matters, and again, it's not just the proximity to key infrastructure, but being close to a major mining hub is also important. So we're about 100 kilometres due east of Kalgoorlie at Manna. Importantly, there's an operating rail line and a road, a 25-metre wide road running about 13 kilometres south of the project site. So that's unique on a global basis, and something I think a lot of our peers certainly envy. And it gives us great, again, development optionality from a logistics perspective. One thing having a great resource, it's another thing entirely being able to get that resource to market. And we certainly have the critical elements to allow that. And obviously, again, being close to Kalgoorlie in terms of supplies, spare parts, labour, water, diesel, all those things that are important for exploration and ultimately development and production. Obviously, a bit of a hotspot in terms of lithium. You can just see the location of some of the other existing lithium, JORC-compliant lithium resources, both operating mines and JORC resources to the west and south of us. So we've had some really wonderful success. The initial assays that have come through on last year's drilling. Our best drill intercept to date, 26 metres at more than 1.5%. So we've got a really advanced geological understanding of the ore body now on the back of that infill drilling, really essential. And our mine plan and mine scheduling is now taking the results of last year's drilling and revising and really focusing on a reduced strip ratio. And in light of the current market, some wonderful optimisation opportunities around both CapEx and OpEx. You know, we will deliver a project that is economically viable in the context of the current market environment, and that's really, really essential. So our team, with that little bit of pullback, have got some time to really focus on optimisation, which is going to be crucial. So when that market starts moving, you know, we'll be releasing a DFS that is compelling. And so we're really excited about the opportunities this year. The Mana system is a large one. It's got a strike of more than 3.2 kilometres, and again, open to the north and to the south. There's definitely an underground potential to the north. We'll look to probably open pit with an eye on the strip ratio down to probably 300 metres, 250 to 300, and then pivot and have some portals locking into those deeper, high-grade pegmatites at depth to the north. So that's the focus at the moment. And the drilling and the results have been really exceptional. Just to touch on the three zones, we've got the central zone. This is the focus of our infill last year. This is some of the verified geological data that's been included in the deposit. Again, our team has a really advanced understanding, the combination of metallurgy and also the drill core that we collected as part of our MET program. We had 12 separate holes, collected around 12,000 kilograms of pegmatite core to underpin the metallurgical test program. So we haven't just cherry-picked the best parts of the ore body to do the MET, it's truly representative. And again, that improves the geological understanding and the processability for our flow sheet design. So we will have a whole-of-ore flotation circuit to maximise recoveries because we've got a very advanced understanding on the back of the metallurgy that's been done, but also the geological drilling, which has underpinned that. A lot of companies, I think in the past, have certainly not undertaken sufficient enough technical due diligence on the ore bodies, and we've had the opposite approach. Mana North, as I touched on, this is to the north. This is a new zone that was discovered last year, and we're continuing to drill out this particular zone through extensional drilling. And again, Mana South, this is the new zone that was really uncovered on the back of last year's drilling. So there's a lot to come in terms of a potential additional open pit to the south of the existing resource. We do have an advanced geological model. We've got an internal resource geologist which is assisting us, and this is an example of the model. We have this on Verify at our booth, so please swing by and I'll be happy to show it with you. I mentioned earlier one of the few companies that's progressing through a DFS, well advanced. And we've got a great understanding on the back of all that really solid metallurgical work we've done. The metallurgical work we've undertaken, more than 31 individual flotation tests. So we've proved through resilience that this ore body, we can produce a saleable concentrate at reasonably high grades. So we think there's additional optimisation to come in terms of the MET. We've proven high recoveries. We think we can improve those recoveries another additional %. But again, I've been in lithium a long time and I understand a MET program versus a real-life recovery can be quite different. I have a very sharp focus on the team to account for real-life conditions. Approvals and permitting made phenomenal progress. The team's really spent a lot of time out in Kalgoorlie meeting the native title groups, and we are on track to have our native title mining agreement, the NTMA, executed this quarter, and that'll really pave the way for a mining lease to be granted soon thereafter. So this is my last slide before Christy pushes me off the stage. Yeah, on track. Of course, disciplined approach, but we are de-risked. So I'll let you read all the wonderful things that are ahead of us this year. But we're in a wonderful position. As I said, when that market rebounds, we'll be one of the first companies to be able to capture the upside. So thank you.